What's going on? What's going on? Welcome back to another episode of Take Profit Tuesdays with your host, Levon Stewart, owner founder of Vonnie Effects. And as I like to always start each and every single video, fair disclaimer. Again, this video contains education, entertainment, as far as some knowledge. If you're not able to survive in these fluctuating markets, I would recommend you to go seek an advisor, someone who's licensed, a broker, someone who can manage your money more carefully. That will charge you a commission, may charge you annual fees, monthly fees, assessment fees, any kind of fees, pretty much. Um, and with that, now you could, be safeguarded. You could, sue them, so on and so forth. This what we're providing you guys is for your individual investments. Again, we teach the 4 pillars, which is, as we always talk about, the capital strategy, this risk management, and the psychology. And that's what we've been building on since day one. So now we're on episode, I believe, 22. We've been doing this for a couple months now. Shout outs to who has been following me through this journey, our journey. We're making money, right? And if you watch these videos since day one, episode one, or even any point, you could see the weekly progression we're making. So right now we're in profit. We're well in profit. We're going to talk about a couple things. I'm probably going to make this a relatively short video. Got a couple things I need to do. So, sorry. First things first. Let's talk about S&P. What's been going on these past couple weeks? So I'm not gonna lie. The S&P has been, in my opinion, it's been rallying these past week or so, and it's been recovering since the war issue, the oil issue. We're gonna talk about oil probably briefly. But one thing I do want to emphasize, at least on a weekly time frame, if you take notice, the U.S. market has been bullish these past 3 weeks, and that's actually a good thing to actually acknowledge, right? We're almost past the point on the first time I bought. We're past all other points. Now today, I'm not gonna disclose how much profit we're in. Doesn't really matter at this point. I'm not, to be honest, I haven't gotten to a buy yet. I'm waiting on another fall. I want to buy it relatively cheap. I might put a little bit more than I did the last time. I don't know. I cannot tell the future. Something might come up. I got the opportunity to buy more. I'll buy more. If not, then I can't. So on and so forth. But again, I'm still using the 4 pillars, right? I'm getting the capital. I have the strategy. We're gonna have the risk management already in place. And guess what? The psychology on top of that. So, with that being said, I am 100% expecting a downturn. If not this week, next week. If not next week, probably next month or so. It's very bullish at this point. Even though it's been very bearish recently, this is kind of the recovery we've been expecting. Again, guys, so if you're bought up here, where I bought, and then you saw at the bottom, you took a loss, right? You failed the psychology aspect of trading, investing. You need to hold on to the position so you're in profit, right? And if you, on top of that as well, if you over leverage that position right there, if you're an options trader, so on and so forth, and you got margin called on the way down, you didn't use the proper risk management, my friend, right? So, and that's just something you have to understand. That, again, if you want to be an independent investor, trader, what have you, day trader, what have you, you need to understand these 4 pillars, because these 4 pillars will make you profitable, and nonetheless will protect your money. You won't lose as much money as the newcomers in the game, right? You won't lose as much money as if you're learning by yourself from the beginning. So just think of it like that. It makes more sense, right? And again, I'm not disclosing how much. I talked about last video, actually, last 2 videos. I talked about how I think up like 1 point something percent from like around right here, which are on more now, which is cool. Nothing to really brag about, because again, the guys, we talked about the goal right. We're trying to have an options trains account or like around 5K just to play with. You know, this is just play money. You know, we're not taking it serious. We're having fun doing this too. Again, if you want to take it serious, by all means do it. I don't recommend it. It might affect the pillar four. You know, whatever money you make, we're gonna, probably save, invest it, pay the taxes, so on and so forth. So, anyways, I do want to talk about one aspect, and then we'll go into the articles, and then we'll probably wrap up the video. Gold oil has been shrinking, at least in the U.S. I don't know if I have any outside viewers. It's been shrinking, falling, and I'm actually happy because now I could go somewhere and I have to spend almost $6 worth of gas. Right, around this range is like everyone was like, "Oh my God, gas is just so ridiculously high." But look, it's reached higher points before, back into the '08 recession. Now we reached the pandemic. Think about that, guys. Isn't it extreme? How many extremes you have to go to look back in history and see what happened. So let's keep that in mind. Um, Start stocking up on your oil while it's still cheap. Just joking. All right, so let's jump into some articles. So shouts to Miles Udlad. He says meme stocks rally, crude oil sinks during mixed trading for stocks. So he says the stock market is a meme market once again. I wouldn't say it's a meme market. I would say it moves as where the money goes. So if people are dumb, foolishly investing their money, then hey, the market's gonna reflect that. All right. So on Tuesday, the major averages finished mixed, with the Dow up that percent, Walmart better than feared earnings report, that percent up. At the index level, the recovery from mid-June lows remain a dominant theme. I mean, we haven't fully recovered from those lows. We're still kind of making headway, I would say. Underneath the surface, however, the resurgence of the meme trade served as the day's biggest story. From the closing bell, shares of Bath and Beyond, which are halted at least twice for volatility during the day. Oh gosh, that means they stopped trades for like twice that day. It's not good. Closed up 29% in the positive. Bed Bath & Beyond shares have more than doubled in the last week and are up from 400% from late July. That's actually really good. Let's see if we can pull up the charts. Bed. Is it BBY? We're doing this live, guys. We're doing this live. Be patient. Be very patient. Alright, we got it. Let's just see what looks on the chart. Oh. It's actually very interesting. Let's pull up on the weekly. And then the daily. So this is actually really interesting to look like. So right here in June, I'll draw it out. Right here in June, we could see that as it was kind of like flatlining out. Right around right here. So you could kind of see how that pump, or where it doubled from what, $4 to now $24. That's a big jump. That's actually a very big jump. So this is a big boost. People, to be honest with you, Bed Bath Body Works has been for a very, very long time. With that being said, you bought it at a very cheap price from it was previous highs. And yeah, this will definitely you're almost buying at the same price back in '93 before I was born. So if you invested back in '93, hey, you're back where you started. But yeah, man, yeah, this is very key. This This is very key because it's listed on the Nasdaq, so that's you know a part of the index as well. But it's a good sign. What possibly could be going on, right? GameStop shares also gained, rising more than 6%. Halted for volatility. The revitalization of meme trade comes as investors appear eager to lean on the playbook of late 2020 as early as 2021 as some rally continues. So that was back in during the actual when the GameStop meme was pumping during COVID. Getting Doge and like all those types of coins. It's crazy time, man. It's crazy. I remember just watching like all these coins pump and millionaires are being made every single day. It was a spectacular playbook for that period of time, but the rules of games seem to be changing. Indeed. Elsewhere, the big early Tuesday was a quarterly earnings report out of Walmart, which came better than feared, kicking off what was set to be a busy week for the retail sector. Walmart reported quarterly earnings and revenue that beat expectations with adjusted earnings per share earning in at $11 on the M. The company U.S. store sales rose 6.5 during the quarter. Shares of retail gained that amount on Tuesday. Yeah, so a lot. This is good for the U.S. economy, man. This is really, really good. Really, really good. So again, shout out to you live for this other article entitled "The Stock Market Isn't Bothered by Cratering Housing Market," which I also want to talk about with you guys today. How we talked about in previous videos how the inflation, the feds, they're raising interest rates. So in order for real estate agent, no, I wouldn't say real estate agents, I would say the sellers in the housing market or homeowners who are potentially want to be sellers in the market and put the house for sales, they're gonna have to realistically bring price down to a more reasonable range because the interests are going up. So no one's gonna really want to pay a premium on a house that has really high interest on it. That's a lot of money being owed to the bank and not put towards equity. So then the article goes to say, on Monday, the latest reading on home builder sentiment from the National Association of House Builders showed the sentiment index fell into negative territory for the first time since May 2020, falling the reading of 49. Any readings of the index below 50 indicates more house builders view market conditions poor than good, meaning that they don't really see it profitable to build more housing. Why would you want to pay all these money in the material, labor, time, energy, payroll just to sell a house at a discount? As a builder, it doesn't make sense. So that's why they're saying it's not as good. Monday reports also marked the 8th straight month home builder sentiment declined, take on the pandemic slump, which negatively impacted the market for 2 months in April and May 2020. Now, the U.S. housing market has been in the worst since 2014, actually 2008 as well. Continues to say, ongoing growth in construction costs and high mortgage rates. You see, we just talked about that. Inflation is already cost of goods such as the material that make the projects, the housing, the wood, the lumber, the metals, so on and so forth. Construction costs and high mortgage rates continue to weaken the market. So with these high prices, either they're gonna have to increase it to compensate, but no one's gonna buy it if the rates are so high, right? You guys follow? Continue to weaken the market sentiment for single family home buyers, which also it's hard for people who are for single family homes or first time home buyers. So the chairman Jerry Contner, a home builder and developer from Savannah, said in the release on Monday, and a troubling sign that customers are now sitting on the sidelines due to higher housing costs. The August buyer traffic number in our builder survey was 32, the lowest since 2014, with the exception of the spring of 2020 with the first pandemic hit. The stock market meanwhile continues to power in way higher. To tell you the truth, the reason why I think this is happening is that people are pulling out of other markets and putting it back into the U.S. market, or stimulating the economy. And like the Walmart, Bath Body and Beyond, they're going out, they're making sales, right? So that's my opinion. I don't know. I'm not the money itself, but it's good to assume these things. Get your brain joggling. The stock market continues to power its way higher. All three major averages gained ground on Monday. Nasdaq went up that percent. The meme stock rally is back. Crypto showing signs of life, which is also true. Adam Newman of WeWork Infamy is getting check to back real estate startups. All right, yeah, which is cool. Which is cool. Yeah, we'll just end it with that one. Let's go to the next one. So shout outs to Ben Wishchuckle, however you pronounce that. He titles this one Inflation Reduction Act. 4 ways it will kick in right away. So he writes, the signing Tuesday of the Inflation Reduction Act is set to kick off a period of action from the Biden administration and other Democratic to sell the bill to the public, while some analysis shows it won't meaningfully reduce inflation. The so-called IRA will devote hundreds of billions of dollars, you hear that, guys? Hundreds of billions towards fighting climate change. Ooh. Reducing prescription drug costs and cutting the deficit. Ooh. President Joe Biden and others will fan out around the U.S. in the coming weeks to discuss the bill, according to the White House, with the cabinet members traveling to 23 states just this month. That's really good. That's probably like a state each day, or then a day break in between. The coming Democratic message will likely focus on the aspects of the bill that continues to improve American lives immediately. Oh yeah? He continues. Including tax credit for electric vehicles and energy efficient home improvements and key health care provisions. So this kind of goes in line with the whole climate change. He's trying to fix that. Now he's going to give them a tax credit for electric vehicles. Or it should be whereas if you have an electric vehicle, you shouldn't pay taxes on your vehicle. Some states that do charge taxes for the vehicle owners. A lot is going to happen, Biden said recently, of what to expect once the bill is signed. Trying to empathize that much of the action will be quick. This is a significant piece of legislation that will have both immediate impact and longer-term economic impact. Oh, really? Wow. As well. Biden top advisor said the goal of this bill is to do what his fiscal policy can do at our current economic moment. Oh, yeah? Alright, we'll wrap this up and we'll say, meanwhile, many experts note that the majority of the bill will be slow acting. That's what I think too. Really, this year is 2023, 2024, 2025 game. Yeah, exactly. You always have to plan a year ahead, act like you're a year ahead, so nothing could be surprised, right? A top economist at the Committee for Responsible Federal Budget recently told Goodwin, who supports the bill, added, what this is supposed to do is help stop inflation from persisting over the long term. Right? Alright, so let's continue. So let's see what we got here. Alright, so I mean, they kind of talked about already, but the 4 ways how it's gonna, make things better, allegedly. So I'm just gonna run through. Yeah. So oil drilling. Yeah. So all right. So yeah, if you guys want to just follow this guy's article, take a look at it. I'm not gonna go too much into it. We kind of talked about it already about the energy incentives. The deficit they're kind of working on, the incentives we're kind of seeing what they're doing. So if you guys want to learn, we're gonna end the stream here. Again, if you guys have any comments, questions, you know, if anything you want me to look at, talk about, just throw it in the comments below or in the chat. Show some love to the channel, like the video, comment, subscribe, hit that noti bell so you can know when we go live every Tuesday. Yeah, we're still growing the team, like I always say. We're still teaching those how to invest, how to trade, short term, long term, as swing traders as well. We also offer a signal service, for those who want to be involved in markets, but you just want to get a quick trade in here and there. Take one of our advice. And then lastly, we have the crypto fund management, which we're kind of still currently building, working on, and expanding. So, with that being said, guys, I'll see y'all in the next video. Peace.